What's going on, aliens, and welcome back to the Forex and 6 series. In this episode, I will be going over the diamond pattern, right? And I get excited when I see this pattern because it usually plays out really well, right? And so unlike the last few videos, this pattern is a reversal pattern, right? It's not a continuation pattern, it's a reversal pattern, right? So what does that mean? So what we want to see is we like to see price come up, give us a point where we're looking for a price to reverse and reject and give us that sell, right? Or if price comes down, we're looking for price to give us that point where it can reverse and reject, give us that buy, right? So that's what we're looking for in the diamond, right? So how do we use the diamond to get that reversal, okay? So what we see here is we see the diamond, right? It literally is a diamond shape, right? And we see that price is going to come up, right, or down. In this case, we're going to look for the sell version, right? So price is going to come up. It's going to give us the touches here, right, and just literally fill in the shape of the diamond, right, and then break out, right, in reverse. We see price came up, made the shape, and then dropped, right, giving us that reversal, okay? And so how do we see the diamond, right, within price? What we see is that price is going to come up, right, continue giving us higher highs and higher lows, right, and then it's going to come up, give us a higher high and then a lower low, right? And so what it's doing is it's came into the start of the pattern, right, so it started very narrow, then get wider, and then come back and getting narrow again, and then we look for that last point on the top right of the diamond for the sell, right? So price comes in, right, gives a higher high, higher low, higher high, lower low, higher high, lower low, lower high, higher low, right? And I know it's kind of confusing, right, but at the end of the day, right, it's just literally filling in, right, starting narrow, getting wider, filling in the diamond shape, and what we're looking for is we're looking for this point right here, right? We want to find this last touch on the top right of the diamond for ourselves, right? So how do we see it actually in the market? And I'm pretty sure you guys can already see it. Here it is, right? And it's not as pretty as the drawing, right? But let me go over why I still see this is valid, right? And this is still, a great diamond that I was able to catch this trade on, right? So what we see is price came up, right? Gave us that touch, gave us the peak of the diamond, right? And then the bottom peak, and then price started coming down, right? We see this is a lower high compared to here, and this is a higher low compared to here, right? And so once price gave us this, right, we're looking for that third touch, right? That third next lower high to where we can get that price rejection, okay? And so, how do we know to find this point, right? Well, again, like I like to use a fib, right? And so what we have is we have one fib from this high to this low, right? That's the high of the diamond to the low of the diamond, okay? We see that price is right there, right high to the low, okay? And where's our second fib? Well, our second fib is from the lower high to the right to the next higher low to the right, right? See, so price from this high to this low, okay? And why do we put those there? Well, we got to think about it, right? Let's say price is live right here on this blue candle, okay? So what we see is that price from this high to this low, price is within that range, right? Price is right here. It's in between this high and this low. However, it's also within this high and this low, right? So we're using two fibs as a double confirmation to see where this retracement is. This retracement is going to come up, tap, and then drop. Okay, that's exactly how we use a fib, right? So what we look for is look for levels to line up, and we kind of see that nothing necessarily truly lines up within these levels, right? I like to use these top four: the 0.618, 0.71, 0.786, and 0.886, right? And I like to see which ones line up with each other, right? And we see that in this case, price pushed all the way up here, right, giving us these lots of wicks, right? So the best area probably would have been this 786 and like the 71 type area. Me personally, though, I would have been looking at the 618 and this 618, right? They're not lining up. However, they're in the same area. And let me show you why I would have looked at that, okay? If we come to the right, what do we see? We see price came up here and rejected here, right? So there's an area of resistance right here, okay? Then price dropped, came back up, gave us more resistance, dropped again, and then we see that price, kind of broke through. But overall in this area, there's that resistance area, right? And then we also see, again, I trade something called smart money, right? We see price drop, give us this last push up before the move down, right? So I'm looking at this area, right? And we see that those, again, the 618s cross right between it, right? They give us right there, cross right between this. So my entry would have been right here within this area, right? I would have liked price to come out there, reject, and then drop, okay? However, we did see it push up a little higher, okay? But nonetheless, this is still a good trade. And let me show you that our risk to reward, it would have shown that we would have been perfectly fine. We would have had some drawdown, but definitely we still would have got this sell, okay? And we did. I actually did catch this move, right? So price pushed up, right? And we see price got choppy, or price rejected multiple times here, right? It did break out of the diamond, but the reason this is still valid is because when we think about the diamond, right, we see, right, we have our high, right, then a lower high, then another lower high, right? And so we're looking for this point. If we think about the diamond, right, it's a downward sloping line. This needs to be a lower high compared to here, right? If it pushes up, if it is something like that, then it's not a diamond, and we're expecting price to possibly continue going, right? However, all we need is that price, this point, to be lower than this high, right? So again, my entry would have been looking at the 618. So I would have put a sell limit here, and then, you know, stop loss up here. Again, had drawdown, but nonetheless, we still caught the move. Okay, and then we also see my take profit. I like to use these levels of the negative 0.618, negative 0.272, right? And I'm using the bigger fib, right? Because it is the overall move, right? This is more to line up for our entry, but the bigger fib, right, from the high to the low, we like to see what levels line up, and I'm using the negative 0.618 because when we think about the diamond, right, price is going to start low, push up, make its shape, and then come back, and usually it matches that low, right? Price will come back down and match that low. So what I like to see is that, you know, like this fib level is the lowest one near that low. I'm going to take that as my take profit, and we see price came down, give us a little retracement, and then continue down and hit our take profit with ease, right? So that is the diamond. I hope you guys, you know, got a lot of value from this video. I hope you guys, you know, go back test it and, you know, try to find it within the markets now that we look for. And, you know, I just appreciate you guys watching. You know, I hope you guys get a lot of value, like I said. And, you know, we come in peace and we come in profit. Thank you, Xavier.